Okay, hello everyone. We had an explosive week in our live day trading room, daytradingthefutures.com. You can visit us at daytradingthefutures.com. Just come on in for a 3-day free trial, and you can see my powerful indicators going to work in the euro and the crude oil futures market. So if you want to come visit us, daytradingthefutures.com. Now, what we have in the room is very leading indicators. Unlike any other trading room in the world, we offer indicators that the algorithms actually trade. 80%, a little bit over 80% of the market is controlled by institutions, hedge funds, and high-frequency traders. And we have the indicators that predict where they're buying and selling using market profile, my institutional harmonic levels, which I'll go over. It's called the low in the euro for my members to get in the live room. We actually call it the low in the morning session. And so we'll go over that here in a second also. This is one of the comments yesterday by one of my live members in the room. The live members in the room love the indicators that I have in the room, and they use those to trade off of market profile and also these harmonic numbers, which I'll show you, and we'll go over that in this session. I'm also going to touch base on how we have a relationship with the dollar and the euro and crude oil. Okay? So Don stated yesterday in the live chat, Don, I've been a trader for over 10 years. This is the best program I've ever seen. What Don was commenting on was my harmonic levels that automatically plot. Traders that use Fibonacci's or use harmonics, they don't know which levels that these are going to stop at. Well, my algorithm that I have programmed actually will pick up these certain levels that the institutions will be buying and selling. This week, my 1.618 number, my 1.272 has called the high and the low to the tick for the session 3 days in a row. 3 exact days in a row, I call the high and low in the market. Okay, so using this number to show you these automatically plot. This 1.618 extension was on my main moving average in the room, and we had a huge explosion to the upside. And before we go on to talk about my market profile levels and my trend indicator, we have several members that have come over from some other chat rooms that have signed up to our room. Do not average down, traders. If you see a trader that's averaging down, that's showing you how to average down in the market, they do not know how to trade. They're not trading their own account. If you see traders doing 10, 11, 20 contracts, that means they don't know how to place a position in the market, meaning with a small stop. I need the exact level to buy here. I'm not trying to buy below on another support, another support, another support, average in, average in, average in. If someone keeps averaging in, think about it. If you average in one contract and average in 2, all of a sudden you're up to 10. It only takes one trade to wipe your whole account out. So don't average down. Traders that average down, okay, do not know where the market's going to stop. They have lagging indicators such as MAs that they just basically trade off of. So make sure if you're, I'm just telling you this, we had a few traders that signed up to my live room that have blown their accounts up from these other trading rooms that average down and just use moving averages as their number one tool. Moving averages are great, but we only have a few in the trading room. You don't need to have 3, 4 on a bunch of time frames, and you sure as heck should not average down the market at all. We've had a lot of traders come from other trading rooms that have just got killed. I'm warning you new traders out there right now, if you average down, you're going to be in some serious trouble. So don't average in the market. Okay, secondly, so let's look at Friday's action on oil, how I called the high in crude oil. I actually typed this in the chat room. This is a trading room, chat room high in oil. This is high value area. I have an indicator that shows this is high value area market profile. Consequently, at the same time, I had one of my key levels. My key level right here, 886. 886 is a key harmonic or Fibonacci level that we trade. This is the secret sauce of the market. I know the exact levels that the algorithms trade, all these billion-dollar and million-dollar hedge funds. I know exactly when they're getting in, when they're getting out. This will post automatically in my room. If you have an 886 and 1.618 retracement, then you have, and if it's on a major market profile, you have a major top or major bottom. I called the exact high in the market, and I got out at the exact low to the tick at a 1.618 tool retracement. So these automatically come up. That's why Dawn said this is the best indicator she's seen in 10 years. It's because it gives you the exact levels the institutions are buying and selling. Okay? There's no subjectivity to this. There's no average in, let's average in here, average in here, average in here. Don't average down. Pick your spots in the market. Put a small stop in. I had a 7-tick stop on this trade after I got in, and it came back up. I reshorted it right here also. I typed in the live room. It's my next short. It came down to my main moving average, and this is a cover to go long. So pick your spots in the market. If you do not know where to pick your spots in the market, okay, you're going to do yourself a big disservice. You can't just keep averaging in, averaging in, averaging in. Okay, some of these traders, that are trying to educate traders out there are doing them a big disservice by saying, hey, if you average in at 108 and it goes to 120, you can average in another one contract to make your average at 110, or a 10. Don't do that. Because guess what? At the market, if you're short 10, 20 contracts on an average, if it takes off on you, goes down, you're blown up. And several traders that's come in my trading room, they blew up their accounts by listening to these average down people. So make sure you don't do that. Now, my trend indicator. Let's look at the dollar relationship and using my trend indicator in the room. The trend indicator, very simple. You turn red to green, and you're above my average true range stop. You have a big move in the euro. We had a big move in the euro on this big push up on the 24th here yesterday. Look at this. Red to green. My algorithm tells me that the momentum is shifted. I have an average true range stop to keep me in. Now let me show you this real quick. Let me show you the relationship before I pull this off in the market. Okay, here's crude oil. How can my algorithm keep us in for 250 ticks straight up? Look at that. This is the 23rd. 250 ticks. We knew coming in the trading room, we had a momentum shift right here from my trend indicator. I was green all morning. I shifted red first bar. I closed under my main MA, 100 tick drop. Then, as we come into 1030, we had a momentum shift, red to green. My algorithm told me that I'm going long. I had special spots in the market for you to go long, 250 ticks all the way up. But how do we take that euro long and how do we take the crude oil long? It's all based upon the dollar. If you have the dollar right here in a downtrend, dollar sellers equal euro buyers, and I teach you how to do this. My algorithm told me I had dollar sellers all afternoon, all morning. Dollar sellers, that equals euro buyers and oil buyers, and we had a big explosion in the market using my harmonic numbers and my market profile. We'll show you the exact bar to enter these trades. There's no subjectivity in my trading room. Come visit us at daytradingthefutures.com. Once again, I don't know, what trading room or trading rooms are doing this. They keep averaging down. We're getting clients that are blowing up their accounts that are coming over to our trading room. Do not average down. If you can't pick spots in the market, then you do not know the levels to trade off of. Come to us. We'll show you how to do that. All right, everybody have a great weekend. Take care.